If there's anyone who's a bull in silver and in gold, that's me. But I do think that near term, it's.
You're watching Silver News Daily. Subscribe for more.
Silver prices are set to skyrocket, and Peter Krauth says this is the moment you've been waiting for. But here's the kicker. Silver has just pulled back, and it's creating the perfect buying opportunity before prices take off. The real question is, will we take advantage of it before it's too late? Stay with me as we break down why experts believe silver is primed to surge, and how you could be on the winning side of this massive market shift. You don't want to miss what's coming next.
Absolutely. So there's a very sort of notable investment house called Gehring and Rosenzweig. I believe they're out of New York, and Leigh Gehring managed at one point a few years back, I believe it was the world's largest commodities fund. So he knows what he's talking about, and he recently, or the firm made a comment on the uranium market, and they were saying that they looked back at uranium and saw that about 5 years ago they became bullish on uranium because the market had moved into a structural deficit. Reactor demand was outstripping supply, and the buyers for fuel were really going to what they called secondary supplies. They, because of Fukushima and this massive pullback globally, and cutback of nuclear power production, there was a lot of secondary supply. So uranium fuel just sort of piling up in inventories, and so the buyers for the fuel were able to just tap into these inventories and not put really any pressure on uranium miners to produce uranium to be converted into fuel. They could just, as I say, buy from these above ground stockpiles and draw down on them. And that kept prices low and didn't really disturb the market, so to speak. Well, I talked about this before. And if you look at what happens in silver, you and I have talked about this. It's been in a structural deficit for 4 years. I did some research and tried to figure out why is this kind of ongoing persistent deficit not pushing up the silver price? And to me, at least, the most obvious answer becomes we have had a few billion ounces of silver supply sitting in futures markets, sitting in ETFs. And since early 2021 or so, these major futures markets have seen their inventories drawn down. And that has allowed especially the industrial users to tap into a silver supply without pressuring the demand side that would have needed to have been met from mining, for example, or even recycling. So, these supplies are much, much lower now. We're looking at, them being at maybe 20 or 30% of what they were 3 years ago. And I think that game is almost over. That's playing itself out. We're getting really close. And so when I heard this statement from Gehring and Rosenzweig in terms of, the conclusion they came to on uranium, I thought, wow, that is a perfect parallel for where we've been in silver over the last few years. And then look at what happened to uranium. It absolutely exploded higher. So I think that's a very appropriate parallel, for the silver market and what may lie ahead.
Right now, silver prices have dipped slightly, and for many, that might seem like a warning sign. But here's the truth that smart investors know. This pullback is exactly what creates the biggest opportunities. You see, the current dip in silver's price is largely influenced by external factors like recent strong U.S. labor data, which has dampened expectations of a significant rate cut from the Federal Reserve. When interest rates remain high, it raises the opportunity cost of holding non-yielding assets like silver, making them less appealing in the short term. But here's the catch. This dip is temporary. The fundamentals for silver are stronger than ever. Peter Krauth sees this moment as a rare chance to buy in before the market wakes up and silver prices skyrocket again. With inflation still a looming threat, the dollar's value eroding, and geopolitical tensions rising, Silver's position as a safe haven asset is only growing stronger. Think about it. How often do you get the chance to buy into a commodity with this much upside potential at a discount? This pullback isn't a warning to stay away. It's the signal to go all in.
So exactly, China has there was a recent chart again from Tavi Costa where he showed silver imports to China, and these are 4-month change charts, and going back to I think it was around 2009 2010, we had an all-time high since that period in the 4-month change in silver imports to China. So I believe that some of that is investment. I think more of that is for the production of solar panels. And I know from speaking to mining executives that the demand from China is very, very tight. One in particular has told me that they sell half their production to China, the other half to the West. And he said the Chinese buyers are basically chomping at the bit. They are prepared to pay a couple of dollars above spot even. They're prepared to pay in advance of delivery. They really, really want that metal. And then you've got India, which I think that is slowly becoming the new China for silver. India is forecast by the International Energy Agency to experience the largest demand growth for energy of any country over the next 30 years. And their silver imports have been off the charts. I mean, in February of this year, they imported it with 70 million ounces, and that was about 64%, I think, of the entire level of imports for 2023. And in the first 4 months of this year, they already surpassed their imports from 2023. We had another big spike in the month of August, when you look at the numbers. And I just think that, there are different things driving that. A couple of months back, the Indian government cut back. I think it was about 2/3 of the duties on importing gold and silver. So that just gave a shot in the arm to the precious metals sector imports. Obviously, it cut the price for them, and so they imported a lot of gold and silver. And it's still quite small when you compare it to China, but their annual manufacturing capacity in India for solar panels is expected to triple from 2023 to 2027. That's still going to be at somewhere like maybe 5% or so of China's levels. China is dominating the industry worldwide at about 80% of manufacturing capacity. But I think that India, for these different reasons that I've mentioned, is really a factor to watch very closely when it comes to silver. They're very, very precious metals savvy. They have a strong affinity to them. They understand them very well for very good reasons. And so and with gold at such high prices, all-time high prices. People in India are like many other places that have history with precious metals, and they're looking for deals or at least more affordable options. And silver certainly fits that bill versus gold. So it's definitely one to watch.
Now, let's talk about Peter Krauth, a name that's well known in the world of precious metals. With over 20 years of experience in resource investments, he's not just any analyst. He is the author of The Great Silver Bull, a comprehensive guide that lays out why silver is one of the most undervalued assets on the planet. According to Krauth, silver is currently trading far below its true market potential. Why? Because while other metals like gold have surged over the years, silver has lagged behind, but its time is coming. Krauth's bullish case for silver comes down to a few key factors. First, he points to silver's massive industrial demand, particularly in rapidly growing sectors like green energy and tech. As more industries rely on silver for everything from solar panels to electronics, demand is soaring. But here's the kicker: supply is limited. Silver isn't just a safe haven asset for protecting wealth. It's also a critical industrial metal that's becoming more essential by the day. Krauth argues that silver's inelastic supply, Meaning it's most in mind as a byproduct of other metals means production doesn't ramp up just because prices rise. This supply-demand mismatch is what makes silver so attractive right now. And here's the boldest part of Krauth's thesis. He believes that silver is not just undervalued, it's massively underpriced compared to where it should be. If you're thinking this sounds like a once-in-a-lifetime opportunity, you'd be right. This pullback might just be the opening you've been waiting for, and Peter Krauth is here to show you why it's time to get serious about silver.
It's true that it has become less of a monetary metal. And so a couple of thoughts around that. One is that if you look at what happened, I believe it was 2021. If you look at the statistics that are put out by the Silver Institute, the investment demand for silver was off the charts. It was more than we had ever seen before. It was something like 330 million ounces, I believe. That was a third of the entire supply of silver for that year. So it can really come in waves. The other point that I want to make is that and it is the case, I do believe it's the case that we're sort of in a new paradigm, so to speak, where silver has become and is becoming more and more of an industrial metal. That, let's say we've shifted from 50-50, half investment, half industrial. And we've even gone, which I think is pretty much the case now, we've gone in the last few years to 60-40, meaning 60 industrial, 40 investment. What that says to me is, of course, these can continue to shift. This is not set in stone, but I believe a lot of the industrial demand is very robust, even in an economic slowdown, because so much of it goes to solar, electronics. There are many applications now, and because of the energy transition, a lot of these uses are almost difficult to kind of wind down, especially solar, for example. So much of that is going to continue to grow for multiple reasons. But I think that the industrial demand side of it will stay quite steady. But because it's grown, and if let's say it stays and doesn't continue to grow, but let's say it stays over the next few years at 60%, this new smaller portion that's available for investment, now 40% rather than 50%, to me means that when people do turn to silver as a monetary instrument, the way they did in a very big way in 2021, and even the year after, I think it was 2022, it was quite high, over 200 million ounces again. When they do shift to that, and that's going to happen again because it's a very sort of flowing kind of situation, and there's a lot of FOMO involved. People are, when they see that move, they kind of jump into it quite quickly. All that means to me is there's even less silver available for that portion, for the investment demand. So I think that's going to just make it rocket even higher, because if you've got this more limited supply for this particular use being investment, and people will really come back to it in a big way, the demand's going to just push the price of silver up even faster. So I think, we're going to be in for a silver squeeze, sort of 2.0 or 3.0, within the next probably couple of years. I do think that's something like that's going.
One of the biggest wildcards driving silver's potential surge is the increasing geopolitical tensions around the globe. If you've been following the news, you've probably seen how conflicts in the Middle East and other regions are adding layers of uncertainty to the global market. And whenever there's uncertainty, investors turn to safe haven assets like silver. Just recently, escalating tensions in the Middle East, particularly the conflict between Israel and Iran, has sent shockwaves through global markets. Why does this matter for silver? Well, when geopolitical crises strike, the world tends to see sharp increases in inflation, especially as oil prices surge due to fears over disrupted supplies. And with inflation rising, the Federal Reserve could be caught in a tough spot, forced to balance between stabilizing the economy and controlling price hikes. This is where silver comes in. Historically, silver has always been a go-to asset during periods of instability. When fear spreads across financial markets, Silver becomes an attractive store of value, and its price often rises in response. With tensions in the Middle East only growing and inflationary pressures mounting, silver's role as a safe haven asset becomes even more critical. Here's what makes this moment particularly intriguing. While silver prices have pulled back in the short term, these geopolitical factors are brewing just below the surface. Investors who see the bigger picture understand that this pullback won't last long. As tensions flare, expect silver prices to start climbing once again. In fact, it's these very crises that could serve as the trigger for silver's next major run-up.
Exactly. And I think we all know that wages have not kept up with these rises. And that's people's reality is that, perhaps they won't rise as quickly. And like you say, they take credit for that. Maybe prices will not rise as quickly in sort of the near to medium term. But the reality for many people is that their wages haven't even kept up with the rises that we've seen. And so, it's quite the quandary. It's something that, I talk about in the book, that is called financial repression. And, that's central banks keeping rates, expressly low, on purpose. And if you're in an environment where they're keeping rates below the rate of inflation, then you have you have negative real rates, and that really eats away. Imagine, the boomers are probably the largest retirement grouping or section of the population that we've ever had, and so most are trying to live off of their savings, right? And that's at least the goal. But if you're in a negative position, think about earning very small amounts, even on, a large nest egg. People cannot, it should really be that they can live off the interest only, whether it's, tighter or more comfortable is one thing. But essentially, if there's enough saved up, they should be able to live off the interest. That is simply not the case for many anymore. They have to eat away at their capital. And that's financial repression. It's not an accident. It simply makes these large debts that federal governments have easier to pay back because they're paying back with inflated dollars, that have less buying power. So it makes their job easier, and the average person, has to deal with these realities.
One of the most compelling points Peter Krauth makes about silver is its inelastic supply, and this is crucial to understanding why silver prices could surge. Unlike other commodities, silver's production doesn't easily ramp up when demand increases. In fact, most of the silver that's mined today is actually a byproduct of mining for other metals, like copper or zinc. This means that even if silver prices rise, mining companies don't necessarily increase their silver production because they're focused on extracting those other metals. Krauth sees this as a key reason why silver remains undervalued. Think about it. Demand for silver, especially in industrial sectors, is climbing fast, but supply isn't responding the way it does for other commodities like oil or copper. This mismatch between rising demand and limited supply creates a scenario where prices have nowhere to go but up. What's more, the silver that does make it to the market is being quickly absorbed by industries that can't function without it, like green energy, technology, and even the medical sector. This leaves even less silver available for investment purposes, which further drives up its scarcity. So, while silver's price has pulled back slightly in recent weeks, this elastic supply issue is setting the stage for a massive price jump. Investors who understand this dynamic see silver not just as a hedge against inflation or a safe haven asset, but as a metal poised for an incredible surge. And Krauth believes this surge could happen sooner than most people realize.
Exactly. That's a great point. And so, in fact, in my book, I quote some of Tabby's work. He does a fantastic work, and I'm happy to use it and give him credit for it. One of the interesting charts that he produced recently shows what inflation expectations are, from the general public. And these are expectations going out 5 to 10 years. So this chart goes back to, I think it's the early or mid 1990s. And so it never went above 4%, even at the peak of the financial crisis back in '08. And it peaked at 4 and it quickly dropped. And then it dropped and it went sideways for a while and averaged around 2, maybe 2.5% for, as we just mentioned, about a decade. Then it ran up when we got to 2021, 2022, and even in 2022, when we were peaking at 9% inflation. I remember well in the middle of around July of 2022. That's like triple of what official inflation is right now. Even then, people's outlook for inflation did not pass right around 4%. Fast forward to today. I think they just thought, hey, this is a one-off. It's the COVID issue, and this is going to go away. Well, 2 years after that, or just a little more than 2 years after that, their outlook is for inflation to actually be even higher than 4% over the next 5 to 10 years, more like 4.5%. Is what they're expecting. So I think that, and I talk about this in the book as well, I think that, this has become embedded. People are starting to really believe and accept that inflation is here to stay. It's not going away. And there's something people need to remember too, is that it's one thing to see inflation, see it tick up and then see it back off. But even if inflation went to zero today and stayed at zero for whatever, and the next few years, that does not change that we're at a new, much higher price level, right? That's not going away. That doesn't mean that prices are going down. That would just mean prices are staying at this new elevated level that we've reached. I think people need to understand that. So even lower inflation still means higher prices than where we are. So, it gets into the weeds of it a little bit, but it's not a difficult concept. I think people understand that. And if they see prices rise, they should expect that, just perhaps rising for the next little while, not as quickly as they have been. And I think, like I said earlier, I think that we may be as little as a year away. I hate to say it, but before prices start rising again at a more accelerated pace like we lived through over the last few years.
Now, let's talk about one of the most significant forces driving silver demand: green energy. You've probably heard about the global shift toward cleaner energy sources, but what many don't realize is just how crucial silver is to this transition. Krauth has been very clear on this point. Silver is indispensable when it comes to technologies like solar panels, electric vehicles, and other renewable energy solutions. Here's the reality. Silver is a key component in solar panels because of its excellent conductivity. In fact, every solar panel produced requires a significant amount of silver to function efficiently. And with governments and companies worldwide pushing for aggressive renewable energy targets, demand for solar panels, and by extension, silver, is skyrocketing. China and India, two of the world's largest and fastest growing economies, are rapidly scaling up their solar power capacities. For example, China alone manufactures around 80% of the world's solar panels, and their demand for silver is off the charts. India is quickly following suit, projected to triple its solar panel manufacturing by 2027. This growing industrial demand isn't a short-term trend. It's a structural shift that's here to stay. As Krauth points out, even if solar panel production remains stable, advancements in technology are leading to the use of more silver per panel. So the more we move toward renewable energy, the more silver will be in demand. Yet, as we discussed earlier, the supply of silver remains limited. This creates a perfect storm where rising demand, driven by the green energy revolution, meets an inelastic supply, pushing prices higher. In Krauth's view, this is one of the strongest arguments for why silver is currently undervalued. As the world continues to embrace green technologies, silver's industrial role will become even more critical, setting the stage for substantial price gains.
Things, labor, end of globalization, energy transition, defense spending. These are things that are all sort of layering on top of where we were of 2% inflation. And I think they probably add up to somewhere around an additional 2%. So I think we're at a level where we're going to see an average of structural inflation much closer to 4 or 4.5%. I think, I've said a few times, I think 3% is the new 2%. And frankly, I think it's actually higher than that. So these things, as I say, they're becoming embedded, and it's going to be a real challenge. If you look at what happened in the 70s, we had successive waves of inflation. So what would happen was you got that first wave in the late 60s, early 70s. The central banks would step in, raise rates, and that would calm things for a while, which is what we're experiencing now. So it's very easy to relate and understand that. But what happened was, naturally, they didn't raise rates and keep them up. They started to back off and start cutting, which is, again, what we're doing now. Well, interestingly enough, if you look at that very first wave in the 70s, by the time, once it bottomed, it only took about 12 months for inflation to start climbing back up again in a very meaningful way. And we ended up at inflation that peaked above the first wave. So frankly, I think that's what we're in for this time as well. We're going to get successive waves of inflation, and it's going to be very challenging. And we know from the 70s that the 60-40 portfolio really had a tough time. In fact, the entire decade of the 70s, it had a net real return of minus 3% annually. The S&P and the Dow were flat for a year without accounting for inflation. So I think that's sadly the kind of outlook that there is. And so commodities did extremely well. People really need to look at that closely and factor in at least some sort of allocation to the commodities sector, and especially the precious metals.
Another key factor Peter Krauth highlights in his bullish case for silver is the ongoing depreciation of the U.S. dollar and the persistent threat of inflation. These two economic trends are crucial because they directly impact the purchasing power of your money, and silver, as a tangible asset, offers protection against both. Let's break it down. Inflation is essentially the slow erosion of your money's value as everyday items like groceries, gas, and rent get more expensive. Over the past few years, inflation has surged, with prices for essential goods skyrocketing. Meanwhile, the U.S. dollar has been losing value due to massive government spending, soaring national debt, and the Federal Reserve's monetary policies. As Krauth points out, the U.S. government has been printing money at an unprecedented rate, adding trillions to the national debt, which now stands at over $34 trillion. This creates a dangerous financial environment where the value of the dollar keeps falling. So, where does silver come into the picture? Unlike paper currency, silver's value isn't tied to the whims of central banks or inflationary pressures. In fact, when the dollar weakens, silver typically strengthens. Investors flock to silver because it acts as a hedge. It holds its value while fiat currencies lose theirs. Krauth argues that the dollar's slow decline, combined with inflation, is already starting to push investors toward precious metals like silver. And here's the kicker. Even if inflation stabilizes, the damage has already been done. Prices won't go back down to pre-inflation levels, and people will still need ways to protect their wealth. That's why Krauth believes silver is one of the best options for safeguarding your money in this economic climate. In times of financial uncertainty, silver shines. And with inflation and dollar depreciation likely to persist, the case for silver as a store of value only gets stronger.
Yeah, so that's a great point. In fact, I did talk about that recently. In a recent presentation, I looked at where inflation was if you go back, let's say from the great financial crisis, so 2008 or so, up until right around the time of COVID or a year after that. And that was really about 2%. And I clearly remember the Fed and other central banks being sort of antsy and anxious about trying to get inflation up. Their worst nemesis is lack of inflation or deflation. They say they don't want inflation too high, but they certainly don't want deflation. We just have to look at the kinds of things that Bernanke has said in the past about the Great Depression and so on. And so post-financial crisis, as I say, until around the time of COVID, was averaged right around 2%. But since COVID and the massive printing that we've seen, there are some things that look like they're becoming embedded now. We've got things like the ability for labor to command higher wages. We're looking at certainly we can pretty much agree that COVID triggered the end to some forms of globalization. Supply chain management really now is looking at sourcing things much more closer, anything that's sort of vital or critical. They want to have options to be able to source these kinds of things much more closely, closer to home. Then you've got the energy transition. This has become sort of widely accepted, embedded, mandated, etc. And then the fourth item is defense spending. And, in the last couple of years, we have, sadly, it seems like more and more wars are breaking out, and they don't seem to be ending anytime soon either. There's more and more mistrust, partly as well, I think, related to COVID. And so these are all.
To really understand why silver is such an exciting investment opportunity right now, we need to take a look back at history, specifically the 1980 silver price peak. During that time, silver prices hit an all-time high of nearly $1.50 per ounce. Adjusted for inflation, that's equivalent to about $1.60 today. So why is this important? Because Peter Krauth believes that silver is currently undervalued compared to its historical highs, and this opens the door for significant price appreciation in the near future. Let's put it into perspective. Silver right now is trading around $31 per ounce, still far below its 1980 peak. Compare that to other metals like gold or copper, which have long surpassed their historical highs. This suggests that silver is lagging behind, but it's not because it lacks demand or importance. In fact, silver's demand has never been higher, especially with its growing role in industrial applications. The problem lies in market perception. Silver has been overlooked and undervalued for decades, despite its critical importance in both the financial and industrial worlds. Krauth points out that every other commodity that peaked in the 1980s has already experienced massive growth, with some metals trading hundreds or even thousands of % higher than their 1980 levels. Silver, however, remains the outlier. This gap presents a golden, or rather silver, opportunity for investors. If silver were to reach even a fraction of its inflation-adjusted peak, investors could see substantial returns. And with all the macroeconomic factors we've discussed, inflation, dollar depreciation, geopolitical tensions, and rising industrial demand, silver is poised for a dramatic price surge that could bring it much closer to those historical highs. For Krauth, the message is clear. Silver is long overdue for a major price adjustment. And when that happens, those who invested early will be the biggest winners.
Yeah, one of the other signs that I had mentioned was if you look at the positioning in the futures markets, there are speculators and then there are what we call commercial hedgers. And the commercial hedgers are really considered the smart money. These are the big investment banks, some large producers. And so they will position themselves either for higher or for lower silver, obviously depending on their outlook. But because they deal with such large numbers, values in terms of exposure to silver, and they have these are professionals that do this as their jobs, and with lots of responsibility. And because of that, they, as I say, they tend to be on the right side of things. And their positioning in silver futures is actually at quite a low level right now, on the long side. So they are, I believe it's net short right now, and it's a pretty high net short position. So they feel that silver is quite highly valued in the near term, meaning that it doesn't have much upside in their view in the near term. And so they as well are quite cautious. Similar action in gold. And so, you have these indications, as I say, from what we call smart money, that it's getting a little rich at this point. It's been a pretty relentless rise. And they just look at probabilities, and the odds in their view favors, like I say, I think a consolidation over the next short while. Maybe we're talking a matter of weeks or maybe even a month or so. And so, yeah, as I say, they're positioning for that.
It's not just Peter Krauth sounding the alarm on silver's potential. Major financial institutions like J.P. Morgan are also weighing in, reinforcing the bullish outlook. In their recent analysis, J.P. Morgan highlighted how increasing geopolitical tensions and looming financial instability are driving investors towards safe haven assets like silver. They call it the debasement trade, a strategy where investors hedge against the declining value of fiat currencies and rising inflation by seeking refuge in precious metals. J.P. Morgan's analysts have pointed out that silver, much like gold, has become a critical asset for investors looking to protect their wealth in turbulent times. They believe that geopolitical risks, especially in the Middle East, combined with inflationary pressures, are setting the stage for a surge in silver prices. The conflict in oil-rich regions is expected to fuel further inflation, and with central banks grappling to control price stability, precious metals are once again in the spotlight. But here's where it gets interesting. J.P. Morgan's analysis doesn't just focus on silver's role as a hedge against economic chaos. They also point out silver's dual role as both a safe haven asset and a critical industrial metal. This combination, they argue, makes silver even more attractive than gold in some cases, as it benefits from both financial instability and the growing demand from industries like tech and green energy. With major financial institutions like J.P. Morgan forecasting continued strength in silver, it's clear that the smart money sees where the market is heading. Peter Krauth's bullish outlook is further validated by this kind of analysis, making the case for silver even more compelling. The bottom line: when both seasoned analysts like Krauth and global financial giants like J.P. Morgan are pointing to silver as a must-watch asset, it's time to pay attention. The pieces are falling into place for a major move, and those who recognize the signs early could stand to benefit the most.
I mean, I think something like maybe that we're headed for one is bigger and bigger calls are from more and more mainstream outlets that gold is going to 3,000, that kind of thing. We've actually seen that in the last few days a little bit. Now, I saw just today that Citi is calling for $40 silver in the medium term. That's pretty bullish from your kind of mainstream investment bank. And I can't remember who, but there were some calls from some of the larger banks as well, U.S. banks, for us to head towards $3,000 gold. Remember, these have been sort of the most conservative and the least precious metals, the least sort of strong precious metals advocates you can imagine for the last decade or two, and now we're hearing calls for these metals to go considerably higher. So to me, that adds to my outlook in the very near term to be cautious. And again, I'm not here to kind of rain on anybody's parade. If there's anyone who's a bull in silver and in gold, that's me. But I do think that near term, it's wise to be cautious. And I've seen other analysts that I'm very hold in a very high regard, and they're starting now to say very similar things. So I feel like I'm in good company that way. I still think we're the minority, but it's the contrarians that tend to over longer term, do better. So another sort of reason to be cautious here.
We've covered all the pieces that make up the bullish case for silver, but now it's time to bring it all together. According to Peter Krauth, silver is on the verge of a massive breakout, and here's why it's likely to happen sooner rather than later. First, let's look at the broader economic picture. Inflation is still a looming threat, with rising prices cutting into everyday expenses and eroding the value of the U.S. dollar. The Federal Reserve's ability to control inflation is limited, and even with interest rates remaining high, inflationary pressures are far from over. As the dollar continues to weaken, investors are seeking out ways to protect their wealth, and silver, with its long history as a store of value, is a prime candidate. But that's just the beginning. The industrial demand for silver is skyrocketing, especially in green energy sectors like solar power and electric vehicles. These industries are essential to the global shift toward cleaner energy, and their reliance on silver is only going to grow. Combine this rising demand with silver's inelastic supply, which, as Krauth points out, can't easily increase to meet demand, and you have the perfect setup for a supply squeeze that could push prices much higher. On top of that, geopolitical tensions are adding even more fuel to silver's potential rise. Conflicts in the Middle East and other regions are driving up oil prices and raising fears of further inflation, all while creating uncertainty in global markets. Historically, this is when safe haven assets like silver thrive. So where does this leave us? Peter Krauth's argument is clear. Silver is currently trading well below its true market potential. Whether you're looking at historical comparisons to its 1980 peak, its critical role in modern industries, or the macroeconomic factors pushing investors towards safe haven assets, all signs point to a major price surge. And the recent pullback in silver prices, that's the opportunity investors have been waiting for. Now the question is, will you take action before the silver market turns? Those who recognize this moment for what it is, the calm before the storm, could be positioned for incredible gains, but the window won't stay open forever. If you're thinking about making a move, now's the time to get serious about silver. And don't forget, if you're finding value in this insight, make sure to subscribe to the channel so you never miss critical updates like these. And remember, this is not financial advice, so always do your own research before making any investment decisions.
Packed on very, very steadily. And it's quite the rise. I mean, if you look from start of the year, I think we're about 30% up in gold, which is really tremendous. We're only about 9 months in. And so I'm getting a little bit cautious, to be perfectly honest. That's what I'm telling my subscribers, that it's great to see. It's what we have been expecting for some time, but these things don't happen in a straight line. And I think actually, if I remember right, when we last spoke, I may have already been kind of indicating, my cautious outlook, because I think that we are probably going to see some kind of, at the very least, a consolidation, so a move sideways, or perhaps even a correction. I don't think it'll be very big. It's not something that would cause me to sell in any way, shape, or form. But it's something to keep in mind, and that obviously the equities would leverage that to the downside if it's a correction versus a consolidation. And so if anyone's looking to maybe add in the near future, I would do it kind of tactically. I'd be watching quite carefully. And, again, I could be wrong, but I think that I would be mostly waiting for a potential pullback.